Hello there. Welcome to Trading Day. Let's get to the big stories we're bringing you from the BNN Bloomberg newsroom. Canadian inflation accelerated in year-over-year terms more than expected in December. Data from StatsCan indicates that the consumer price index was up 2.4% over 12 months. Now, the data were distorted due to a tax holiday at the end of 2024 that pushed yearly price comparisons down, aka prices a year ago were lower artificially. Broader food prices rose more than 6% over 1 year, and that was the biggest jump since 2023. The Bank of Canada says trade uncertainty is hurting optimism among Canadian businesses. In its Business Outlook survey, the central bank says a growing number of firms expect to reduce their payrolls this year due to trade policy uncertainty, slowing demand, and cost pressures. A third of businesses also expect to see a decline in sales. However, more firms expect export sales to improve. Gold is one of the best performers on the TSX today. The miner says its 2025 gold production is on track to beat expectations, driven by strong quarterly output at all of its operations. And Gold outlined fresh targets for the year ahead. It is looking to output of up to 820,000 ounces as operations at its newish mine in Ontario are expected to be ahead of plans. And there's a look at the TSX trading once again in record territory. Tariff threats are back, but this time for a very different reason. US President Donald Trump is warning that he'll slap levies on several European nations for sending only small numbers of troops to Greenland in the face of his threats to take over that Danish territory. But will this potential new round of tariffs and possible counter tariffs mean a lot for the markets? And where does it leave Canada, especially with CUSMA negotiations set to begin shortly? Let's break it all down with Lachlan Wolfers, leader of KPMG Law. Lachlan, thanks very much indeed. It's only threats at this stage, but what is your reaction? Observers saying, well, tariffs are being used for all kinds of purposes now as a weapon.
So, Andrew, great to be with you. I guess as a starting point, as a humble tax professional, the idea that the sovereignty of certain land would depend upon tax and trade policy is certainly something a little bit out of my league. But I guess if you break it down, a lot of the news headlines is talking about the threat from the US administration to impose tariffs on European countries in response to the question of ownership of Greenland. But I really wonder if it would garner quite the same reaction if instead the news headlines said something along the lines of the US threatens to increase the taxes on its own citizens, which is essentially what a tariff does. So study after study kind of shows that the imposition of tariffs, the economic imposition of tariffs, typically falls on consumers, in this case in the US. Typically somewhere in the vicinity of 70% of that sits with them. And so I just wonder if we'd get quite the same reaction if those were the headlines instead.
That's interesting. Yep, we've heard tariffs called a sales tax, a hidden sales tax.
I think that's right. And I think the other aspect to mention here is the tariffs are not actually paid by governments either. So again, if we break this down, let's say you are a Canadian company looking to export to the United States. What does this really mean for you? I think in this situation, those exporters are focused a lot more on questions such as what their customer relationships look like, whether they are able to sell at competitive prices and whether their products are able to get to market and compete effectively. I think Canadian businesses, and indeed in this case, European businesses as well, probably look at this as another speed bump in the road along similar lines to what they've seen for much of 2025.
In what sense? Do you mean drastic tariff threats are issued by Mr. Trump and then he walks it back?
Yeah, so that's been very much the mode of operation that we've seen. So, for example, there were threats against Canada over the release in Ontario of the anti-tariff advertisement. They were walked back. Obviously, the advertisement was as well. There were threats against Venezuela for countries that sell to Venezuela that didn't come to fruition. And then, many of us remember the tariff announcements that were made during the first quarter of last year, the Liberation Day tariffs, which again, a lot of that was substantially walked back quietly with various exclusions, reductions of rates, etc. So that's the pattern that many of us have seen.
You reckon that the Prime Minister, Mr. Carney, has been slow balling when it comes to striking a trade deal with the States. He's been pretty muted in his response. He announced counter tariffs, then called them off, and he threw Mr. Trump a concession. He dropped the digital services tax on the internet giants.
Yeah, so the way I would describe it is this. So the first thing is the Prime Minister Carney could have agreed or rushed to agree to a trade deal with the United States in the same way that the UK did and Europe did. Now look where that's gotten them. Those trade deals with the UK and with Europe are now very much in question in light of the actions, or certainly the threatened actions that have been taken over the last couple of days. I think the second point is you may be reaching a trade deal in respect of an issue or with someone who may not have the legal authority to do that. And obviously this is happening against the backdrop of the US Supreme Court decision on the imposition of IEEPA tariffs and whether that's lawful. That decision is imminent, could happen any time between tomorrow and June this year. And I think that will have a significant impact on this. But I think the other aspect, just to sort of step back from this, is the Canadian economy is actually proven to be remarkably resilient to these tariffs that have been imposed and certainly threatened along the way. Whilst growth has slowed in Canada, I think it is really important to recognise that somewhere between 70 and 75% of Canada's economy is services, not goods. Services are, of course, not subject to the imposition of tariffs. It certainly has an impact on Canada's export markets and its dependency on the United States. But the Prime Minister has very much sat back and said, this is a long-term transition we need to see in the Canadian economy away from the dependency on the United States and diversify across many countries. And that's why he's doing things like spending time, as we saw in China recently. We're seeing him in the Middle East as well, trying to strike new deals with other countries to diversify Canada's trade portfolio. And that's a long-term transition. And I think the final aspect to see in all of this is Canada has not been substantially impacted by the tariffs to date, primarily because of the CUSMA agreement that sits in place. Now, Canada's focus very much needs to be on this review of the CUSMA agreement coming up in the middle of this year.
We've only 30 seconds, but is it almost pointless negotiating any kind of deal with Mr. Trump in that he seems willing to walk away from any agreement?
So I'll borrow a line that I think my wife said to me very recently, which is that, tariffs were imposed on Canada because of a perceived fentanyl crisis. Well, tariffs have about as much to do with fentanyl as chopsticks have to do with an Italian restaurant. And we're seeing the same thing play out again with Greenland. There is no correlation between them. And therein lies the question around the futility of a trade deal, because it could be anything that causes or is the trigger for the threatened imposition of tariffs.
That's a good line. Congratulate your wife, please, on that one. Thank you.
I will indeed.
Thank you very much, Lachlan. Lachlan Wolfers, leader at KPMG Law. Earlier today, Mullen Group, the trucking company and logistics provider, released targets for 2026 that were ahead of expectations. And we hear from a regular guest, Murray Mullen, Chair and Senior Executive at the Mullen Group. That's ahead. Let's get more on these projections from the Mullen Group, Canadian trucking and logistics giant. It came out with its 2026 outlook, targeting up to $2.4 billion in revenue in 2026, driven by acquisitions, improving freight demand, and infrastructure spending. We're joined by Murray Mullen, Chair and Senior Executive Officer. Murray, great to see you as ever. Thanks very much indeed.
Hi, Andrew.
We've heard this term freight recession over the past few years. It looked like there was too much trucking capacity, but you're seeing rising demand?
Well, we're seeing structurally a firming in the market. Andrew, I wouldn't say it's robust, but last year we did a couple acquisitions that are pretty strategic. And if you include a full year's projections and results from those, that will help bolster our results. And then we expect some firming in the economy, but most of the heavy lifting on that economy really needs to be driven off the back of public policy, which is, are we going to support nation building projects? Are we going to invest more in our resource center? And our government's going to continue to deficit finance in the absence of private capital investment. So we're making the assumption that it'll be okay, and we're going to have to work hard to generate the results. I make no bones about it to our people and to investors, is it won't be easy, but we set our goals lofty, and we got to strive for them. Because if you don't set your goals lofty, well, you'll achieve your goals.
If you don't set them lofty, if you go for mediocre goals, that's all you'll get. Is that what you mean?
Yeah, I think that's, as I say to you, that's just part of our strategy with our all of our team. You remember, we got 8,500 people. I need everybody pulling hard every day, including the senior execs. And if we do that, and we work with our customers, we watch all our costs. We got to manage costs. It's still a competitive world, Andrew. But that's our plan, and we're going to start off working really diligently towards that plan.
Can you remind us how much of your business is south of the border and how much is north of the border? And I guess I don't know how you would count cross-border traffic. Yeah, sorry, go on.
Yeah, most of it's, in Canada. However, we do have our U.S. 3PL segment, which is really U.S. logistics and customs brokerage that, we're gonna look at investing, because I'll be blunt with you, is that there is more growth potential in the U.S. than there is in Canada right now, just because of the amount of capital and the deficit spending that's going on in the U.S. So we got to have a position in the U.S., but we still think the majority of our business is still Canada, and it's structurally okay but competitive. But you got to hedge your bets in this market. It changes every day, as I heard you just talking about, and everybody knows it, is that it's kind of uncertain times. But our job is to see through that and say, okay, how are we going to position ourselves and our company? So
I was interested to see that you are investing in robotics for your warehouse operations. So is that a big part of your business? I always just think of you as a trucking company.
Well, warehousing is huge. It's a huge part of logistics, and it's part of the vertical chain that we say you got to help the customer, not just on the trucking side, Andrew. We're not just trucking. We provide logistics services, of which warehousing is an important element of that. And, we want to be able to provide a package service to our customers. If you look at all of the major industry players today, they provide a total solution to their customers, think Amazon. Amazon has the technology, they have the logistics, the warehousing, they deliver the product. They can do just about everything for you. So that's an important part of our strategy too, which is being able to provide a one-stop shop for as many of our customers as we can.
What about getting hold of people, truck drivers? That has been a problem for the industry over the past few years. Is it still hard to find employees in some areas?
No, I don't know. Andrew, we don't have an issue finding drivers. When people talk about that issue, I think sometimes they confuse whether there's drivers or whether there's qualified drivers.
Okay.
And, this is a business. I don't know if you want to be putting unqualified people on the road.
No.
Some of our competitors choose to do it, but not us. So we high grade, but I can tell you, we don't have a fundamental shortage of drivers in this country. That's not correct.
Okay.
We have to have more skills training, but I don't think we have a shortage of people.
Yeah, you reminded me, we have heard concerns about people going on the roads in trucks inadequately trained. Is there something of a problem with that in Canada as well as the States?
Don't know the exact number. I think that it's going to shrink if this year if some of the regulators follow through on what they're saying. But the ultimate objective is, how do you get safer drivers on the road for the general public? And we 100% support that initiative.
Mm-hmm. Maybe we could just put up a 5-year chart for your stock, ideally compared to the TSX composite. And I know you could say that's not the best comparative, but your shares have been moving up pretty sharply lately.
Yeah. Well, I'd like to take all the credit for that, but to be honest with you, we started from a pretty low position. Mm-hmm. And I think it goes back, Andrew. We have to go back to the previous 5 before that, is that we were predominantly a energy services company, and then I had to reposition and retool the company to be more diversified, because that's the way that public policy was going. It wasn't going all in on natural resources. So, we took a step back. It was tough grind, but we put ourselves in a pretty good position with some pretty good investing. And we invest in really good quality companies. We have 42 in our group right now. They're independently managed. And what we do is I invest in gems, what I call them. We're really good quality companies, and let the management teams run it. And that's our primary job. So we've invested in some pretty good companies over our long-term as a public company. It's been 30 plus years, so it didn't happen overnight. I can tell you that.
No, Murray, thank you very much indeed. Always great.
Always a pleasure, Andrew.
Hearing
thank
from you. Murray Mullen, Chair and Senior Executive Officer at Mullen Group. How close are humanoid robots to replacing plumbers or surgeons? We are going to hear from a professor and the president of the Robot Learning Foundation at UC Berkeley right after the break. Large language models have advanced at a staggering pace over the past few years by training on vast amounts of internet data. So that has fueled excitement about humanoid robots, with some predicting that they could soon perform jobs such as plumbing or surgery. Our guest says robots can't be trained the same way as AI models and will take far longer to master even simple human tasks like changing a light bulb or holding a wine glass. We're joined by Ken Goldberg, Professor of Engineering and President of the Robot Learning Foundation at UC Berkeley. Thanks very much. You've had a fascinating career. I know you patented at one stage a robot gripper, and you worked on a project where people could remotely plant seeds and water a garden over the internet using robotics. So you've done a lot of stuff with an artistic side to it sometimes. Thank you very much for joining us. Can we start out? What do we mean by a humanoid robot? Is it one that vaguely has the form of a human being?
Exactly, Andrew. That's exactly what we talk about. So there's a lot of robot arms out there, but a humanoid is a robot that looks like a human, like you and I.
Why couldn't it be a spider or like one of those robot dogs? Or what's important about it looking like a human?
Well, it's a great question. People have wanted to build creatures, mechanical creatures, for thousands of years, going all the way back to the Egyptians. But there's an argument today that this is very timely, that we have so-called need for workers, and especially for jobs that people don't want to do, and that the robot should look as much like we do as possible, so then it can just step in and do those jobs that humans are doing.
You say that there's an important difference between learning to fix somebody's plumbing and answering questions about a Dickens novel using a large language model. What is the vital difference there?
Okay, great. So I'm so glad you asked, because a lot of people have watched the amazing things with ChatGPT and other tools like that, right? And it is quite astounding. It can do many things as good as a human. But so people think, okay, now we're very close to having robots. And they say, when is the ChatGPT moment for robotics? And I am very concerned that that moment may be much further away than people think.
Why is that?
Okay, because the learning a language, learning to speak or do text, is essentially one-dimensional, and you have a string of characters or a string of words. And robots is much higher dimensional. You have to control all of the joints. And for a humanoid robot, there might be 50 or more joints that have to be controlled, all in perfect synchrony. The other problem is that we have data to train our systems for language. So my students and I estimate that there's about 100,000 years of textual data available on the internet. In other words, that's how long it would take you or I to sit down and read all the information on the internet, all the texts. But we have no data for robotics. So we're just starting to collect that data. So it may take quite a long time before we have enough.
People are training robots, though, to assemble things, aren't they?
Well, there's a lot of work on that, and there's a lot of excitement about it. So many companies and many researchers, including my own lab, are trying to do this. And so there is some initial progress, and I'm hopeful that we'll be able to do it. But I just want to say that it's not going to happen overnight. I don't expect it to happen within a year, within 5 years. I'm really concerned it might not even happen within 10 years.
What about self-driving cars? They don't, in theory, need the dexterity you would need to arrange flowers.
Right. So driving is actually a great example. There, you just want to avoid objects. So you just don't want to hit anything. So that's actually turns out to be much easier. It's still difficult, very challenging. And in fact, the data has been collected over the last 10, 15 years to make that possible. So there is progress there. And it's very exciting. So we're getting to the point where these systems are available on many cities in the United States and in China, and I'm sure it's coming to Canada very soon.
I saw one story that some of these, I think it was the Waymo vehicles, are getting more aggressive. They used to be super passive and cautious, but apparently they've tweaked the algorithm to make them get around a bit faster.
Right. So there is the idea that if you're trying to catch a cab to the airport, that you don't want something that's going to be super cautious, which has been a characteristic. Yes. So they have been getting a little more aggressive, and that's a concern for everybody on the streets, all pedestrians and bike riders.
So if one of my daughters wants to become a plumber, I could say, yeah, that's a good idea. You could travel the world with that skill, for example.
Absolutely. You'll never be out of a job. I can tell you, I will bet I would think it's a very safe bet that plumbers, electricians, car repair people working in restaurants, they're going to have their job security is very, very good for the foreseeable future. We're going to need them because humans are incredibly dexterous. We're able to tie knots, to cut cables, to fashion things. It's incredible. And I've been working in this field for 40 years. And every day, as I try to reproduce these things in robots, I have more and more respect for the incredible dexterity of humans.
Tell us, you do these artistic flavored projects. What's your next one? Can you tell us?
Thank you. We have one opening on Thursday in San Francisco. And it's a collection of sculptures and videos that explore the ideas around AI in the context of history and culture. So we're working on them as I was working on them up to 5 minutes ago, and we're still trying to get all the pieces together. But we're trying to basically talk about AI from a critical perspective and think about what really matters, which is really human beings.
I know I'm going too long here, but are you frightened of AI and the risk that it will take over and ultimately try to destroy us?
I'm not. And actually, most of my colleagues don't fear that either. We understand that AI has a lot of limitations, and there's a lot of science fiction out there, as you know. And so people think that it's about to live up to all of those, old movies and novels. But it's really quite far from that. And so it's not something to be afraid of. I think it's actually something to embrace and explore. And I think it's going to be much more positive effect on society and culture than negative.
Speaking of science fiction, we have to go, but that robot, that poster, that schematic to the left of you, is that the
Yes.
robot from the original Lost in Space series?
That is good. You're a very good spot on that. That's Robbie the robot from Lost in Space, which I watched as a kid.
Oh yeah, me
and
too.
Then there's a robot from Metropolis, another
Yes.
old film. So yes, I try to think about these things in the context of history and culture and really what matters.
I watched that show as a kid, and my father told me that I used to hide behind the couch when a scary alien would come along. But I loved the show. Thank you very much indeed.
My pleasure, Andrew.
Ken Goldberg, president of the Robot Learning Foundation at UC Berkeley. Up next, looks as though the Prime Minister's week in China was a productive one. We'll drill into that after the break. The European Union is in talks to potentially impose tariffs on 93 billion euros worth of US goods. That's if US President Donald Trump follows through on his threat to hit European countries with a 10% tariff next month if they resist his takeover of Greenland. According to Bloomberg, the EU is also weighing additional countermeasures beyond tariffs, with leaders set to hold a meeting later this week. And Brussels has frozen approval of a US trade deal. We are seeing Mullen Group stock edging up today. The company is predicting performance revenue this year above expectations. It's targeting up to $2.4 billion, driven by new acquisitions, improving freight demand, and infrastructure spending. Mullen also says it's able to fund its long-term growth, and it will be spending on robotics to improve its warehouses and data management tools. Shares in Keyera under pressure today. This is a Canadian processor of natural gas. It says it shut down an Alberta EnviroFuels facility due to the failure of a key component, and the outage is expected to continue until May. Keyera now expects its liquid infrastructure segment to face a $15 billion profit hit as a result. So the company has revised its 2026 forecast. Toronto stocks higher today. U.S. markets closed for the Martin Luther King holiday. You can see edging up into new record territory. During his time in China, the Prime Minister reached a deal to slash tariffs on a set number, a relatively small number, of Chinese electric vehicles in exchange for China cutting duties on agricultural products from Canada. Let's expand on that with Gordon Holden, former director of the China Institute and professor emeritus of political science at the University of Alberta. Thanks very much indeed for joining us.
Thank you, Andrew.
It's probably a simplistic question, but did the Prime Minister pull off something of a coup last week in China in trade terms?
I think the atmospherics were highly successful. I think, as you noted, the trade outcomes were perhaps not monumental, but I think that the signal it sends to Chinese ministers, Chinese administrators, Chinese companies, particularly state enterprises, is a positive one. And in that system where presidential approval by Xi Jinping means a lot. I think that there's scope for follow-up by provinces, by individual industries like canola, et cetera, seafood, and I think we should see some uptick from that visit in a positive sense.
Of course, countries, they're frenemies, to use that awful expression. Sure, we may cooperate on trade, but the Chinese have been accused of meddling in our political system and running quasi-police stations here. We didn't hear much talk of that aspect last week.
My suspicion, based on my own experience working at that embassy, is that much of that conversation would have been tightly held behind closed doors. But you're quite correct to raise it. China is not a liberal democracy. It has its own internal issues on human rights, but was particularly problematic for Canadians is when its efforts extend abroad, not just lobbying government officials, but and meddling in some fashion. That needs to be watched carefully and curbed.
Right. Trying to influence MPs, for example, we've heard allegations of that. I don't think we've had a reaction from U.S. President Donald Trump to the fact that Canada's opening a crack in the tariff wall to a small number, 49,000 Chinese electric vehicles. There was a suggestion last week that maybe Ottawa actually ran it past Washington before it agreed to that.
I'm not sure if that was done or not. We did see a modest positive comment from the U.S. president, saying that he wasn't bothered by the fact that this agreement had occurred. Of course, he isn't always consistent, and we will see when we get to the actual negotiations of CUSMA whether or not this is problematic or whether that'll be restricting that agreement will be one of the U.S. demands. But I don't think we can wait in the face of uncertainty with CUSMA. We need to look for alternatives. And quite frankly, China, for all its issues, is handily the second largest economy on earth, and one where our own trade is very modest compared to the potential, in my opinion.
Is that right? Where could Canada carve out extra exports to China? What are the most promising areas?
Well, I think agricultural exports is where, with 1.4 billion people, the Chinese have a lot of capacity to buy much more Canadian products as well. Chinese now can afford. They've got a middle class which is larger than the population of the United States. They can afford to get top quality and insist on top quality. I'd also like to see, this isn't easy, more processing of our raw materials, lumber instead of logs, some additional processing of our minerals. That would be great. But the volume is low. Under 4% of our exports go to China. I look to say Australia, it's 40%.
That is low. I mean, obviously Australia is much closer, but yeah, that is low. I wonder, I'm guessing that the Chinese consumer might welcome food products with a big maple leaf on them. I mean, this country has a good global image, wide open spaces, etc. But are we doing that? Are we branding Canadian agricultural products in Canada when we sell them to China, or are we just selling stuff in bulk?
I think a bit of both. I know of some retail operators have been very successful at promoting the Canadian flag, the Canadian image, and there is still amongst a lot of Chinese consumers concerns about health dimensions, about the purity of their products. So if you can demonstrate that the product was not just the raw material came from Canada, but it was processed in Canada, and when you do that, you also get much higher value added for our agricultural producers. So I think there's a lot of work, because that's not going to be primarily done by governments. That's going to be done by Canadian business working with their Chinese counterparts. And the 60% of the Chinese economy now is in private hands. So there's lots of scope for business-to-business cooperation.
And are Canadian businesses being enterprising enough? Are they reaching out? I mean, will they keep getting exhorted to reduce dependence on the US and so on? But are they really getting their act together?
Yes and no. I think we've been spoiled by the easy access to the US market over the decades. And if you're, say, a small company that's doing business in, let's say, Ohio, similar language, relatively similar business culture, etc. No tariffs, dead simple. Now you're facing China, where you have different language, different business culture, huge market, each regional part a little bit different than the other. It can be done, and other companies, I think, have done other countries have done a better job than we have, but we need more Chinese speakers, more businesses that are Asia savvy if we're going to reap the benefits of that massive economy.
And what about the prospects for Canadian high-tech and high-value-added manufactured goods to China? I mean, aviation or vehicles, is there any progress there?
Well, we do some work with aviation. Companies like Bombardier have, for decades, worked with Chinese aircraft manufacturers with some success. High-tech is tricky in two things. One, that is an area where Chinese themselves have made huge gains. They're producing 8 times as many engineers, mathematicians, physicists as does the United States. So they've got massive internal capacity. You also have to be careful about intellectual property and make sure that you've got some ironclad agreement that's enforceable. Otherwise, you're at risk of selling a few hundred examples and then find the same product thrown back at you at a lower price.
Did you say that China is producing about 8 times as many physicists and mathematicians and so on as America?
They have 4 times the population. They have 2 times the number of university students. But if you look at the STEM, science, technology, engineering, mathematics, it's 8 times. Now, the secret sauce for the American economy has been they take the best from the world all over through immigration.
Yeah.
That's now drying up. So I do have some concerns that China's capability in high tech is extraordinary. I think they continue to gain grounds on the West and on the U.S. in particular. There are some areas where they're ahead or equal. There's some where they're behind. But where they're behind, they tend to work really hard to catch up. And so it means also that yes, there's IP leak to China, but I'd like to see us be able to take advantage of some of that high tech in Canada, and i.e., we need IP from China now that we can put to use in this country. It's not always, or in fact, principally the other direction now.
Gordon, thank you very much indeed for joining us.
It's a pleasure, Andrew. Thank you.
Gordon Holden, former director of the University of Alberta China Institute and professor emeritus of political science at the University of Alberta. Coming up, hot picks in software. Many of those stocks have been out of favor, but our guest says there's plenty of promise in some names that you may be familiar with and some that you may not. Software stocks have been out of favor amid fears that AI will just upend the industry. We were joined earlier by Fatima Boulani, Managing Director and Co-Head of Software Equity Research at Citi. We kick things off with her first pick, Palo Alto.
We are absolutely recommending to our investors to put in their portfolios for 2026. The stock has had some lagging performance, but we do believe this is the year the stock can be off to the races. And there's really 3 elements that our view is grounded in. Number one, cybersecurity budgets are increasing. Now, I half joke that, when cybersecurity budgets those budgets start decreasing, then we have a problem. But budgets accelerating are actually an extremely positive dynamic. And based on the body of proprietary work that we've done, a lot of these budgetary pressures that are moving upward, which is positive for Palo Alto, a large part of that is being governed by AI and generative AI, and organizations very actively thinking about large-scale AI projects, but how am I going to wrap cybersecurity around these new frameworks and protocols and projects and applications that we're going to be deploying are going to be deployed in an average organization? So number one, budgets are going up because the impetus and imperative AI is going up. Relatedly, as AI goes up, the use of novel technology is going to go up, which means your risk of threats, your attack surface, the way bad actors and malicious actors can come into into your organization, that can increase manifold. And Palo Alto has the de facto comprehensive portfolio around helping organizations and guiding them through and monetizing broad swaths of this in the process.
We're tight for time. Tell us about your next name, Rubrik. Just remind us what they do, please.
Rubrik is a company that provides backup and recovery solutions alongside cyber resilience capabilities. And really what that means is when organizations experienced an act of God, a natural disaster, maybe somebody in IT pressed the wrong button and brought the whole system down. But even more and more today, this notion of ransomware where bad actors are holding organizational data hostage, you have to pay up to get your data back. In the construct of that environment, Rubrik has become so critical, so consequential, and just catapulted to the top of the list in terms of an area that you have to invest as data grows. Oh, and going back to the earlier point about the adoption of AI, just creating more areas of vulnerability and susceptibility for cybersecurity, that creates yet another opportunity. And Andrew, the overarching theme here is we are at the cusp of a generational shift in the way the average organization is going to think about their IT stack and their IT infrastructure, because they're all getting up and ready to do AI. So you have to modernize your infrastructure ahead of all of this. And both Palo Alto and Rubrik are the plumbing and infrastructure software componentry that are going to help make this happen in a secure way.
And finally, TEAM. Remind us who they are and why do you like them?
Atlassian is a platform of solutions that enables your workforce to collaborate in a more meaningful way. The solutions target developers, so your technical audience, your IT staff, and even folks on the business side. And really, this is a very interesting name for us, where we believe there is a massive dislocation in the valuation relative to what the state of the fundamentals are. There is a very, very acute fear that the rise of AI coding tools and code assistants are going to create a monetization overhang for this business, because this business does price its portfolio on seats or headcount. But we just do not think that's going to materialize, because at the end of the day, if more people are coding and more people are coding with ease, there is going to be massive productivity gains in the way software and applications are created. And that we think directly feeds into Atlassian's core competence around how do you manage this code? How do you debug this code? How do you enable people to collaborate around building applications in this new era of AI?
Up next, we'll take one last look at the markets. We're seeing new record highs for at least two companies that will profit as society ages. We'll be right back. Let's have a quick look at the TSX before we go. Maybe we'll check out a 10-year chart. Our market hitting a new record high. It's barely higher today, I know, but the gold stocks are helping with bullion hitting new record highs. In fact, if you look at the TSX composite versus the S&P 500 over 5 years, our market does come out ahead, especially if you include dividends. There's a comparative chart. The TSX would be even further ahead if you included dividends, because our market has a higher dividend yield. This is just the price chart. However, the Americans are still ahead over a decade after, among other things, a huge run-up in tech stocks. So over 5 years, Toronto's been the place to be, but it's still USA over a decade. A couple of demographic plays here. Severia, they make stair lifts and stuff for adjusting your vehicle equipment for people with limited mobility. And as the population ages, that looks good for them. That stock hitting a record high. Also a record high for Sienna Senior Living. That one hitting a new high. Another stock, as you might imagine, hitting a record high is the gold investor darling, Agnico Eagle. People love the fact that their mines are in relatively safe jurisdictions, places like Finland and Canada. And finally, Randy Smallwood's outfit, Wheaton Precious Metals, also hitting a record high in trading today, as are quite a few gold stocks. Look at the move up there, practically vertical for wheat and precious metals. Thank you very much indeed for watching Trading Day.